The Turkish economy is facing a tempest. The nation is grappling with a potent mix of soaring inflation and interest rates, casting a shadow over its financial stability. The aftershocks are being felt far and wide, impacting businesses, consumers, and investors alike. At the heart of this crisis lies a steep decline in the value of the Turkish lira. This depreciation, coupled with rising global commodity prices, has fueled inflation to levels unseen in recent history. The official inflation rate stands at a staggering 68.5%, but many believe the actual figure to be considerably higher. Adding to the complexity is the Central Bank of the Republic of Turkey's response to the crisis. The bank has resorted to aggressive interest rate hikes in a bid to tame inflation. While designed to curb spending and stabilize the lira, these hikes have come at a cost. Businesses now face exorbitant borrowing costs, making investment and expansion nearly impossible. The Central Bank of the Republic of Turkey, like many central banks around the world, is tasked with a delicate balancing act, maintaining price stability while fostering economic growth. In Turkey's case, this balancing act has become a precarious tightrope walk. The bank's primary weapon against soaring inflation has been to raise interest rates sharply. This approach, while theoretically sound, has created ripple effects across the Turkish economy. Higher interest rates are intended to curb inflation by making borrowing more expensive and saving more attractive. However, in Turkey's case, these interest rate hikes have come at a steep price, exacerbating the challenges faced by businesses and further dampening economic activity. Businesses, particularly small and medium-sized enterprises, are grappling with the dual challenge of rising input costs due to inflation and the increased cost of borrowing capital. Many are finding it impossible to secure the financing needed for expansion or even to maintain their current operations. This credit crunch is stifling investment and hindering job creation, further darkening the economic outlook. The situation highlights the complex trade-offs faced by policymakers in times of economic turbulence. The Turkish lira has been on a downward spiral, losing significant value against major international currencies. This depreciation is a key driver of Turkey's economic woes, fueling inflation and undermining confidence in the economy. One major factor is the widening current account deficit, which reflects Turkey's tendency to import more goods and services than it exports. This imbalance puts downward pressure on the lira as demand for foreign currencies to pay for imports outstrips the supply generated by exports. The situation is exacerbated by Turkey's reliance on energy imports, which becomes more expensive as the lira weakens, further widening the deficit. Political instability and concerns about the independence of Turkey's economic institutions have also weighed on the lira's value. International investors tend to be risk-averse and often pull their capital out of countries perceived as politically or economically unstable. Addressing this issue requires a multifaceted approach that includes structural reforms to boost exports, attract foreign investment, and restore confidence in the country's economic governance. Section 4. Consumers under pressure. The rising cost of living. The most immediate and tangible impact of Turkey's economic crisis is felt by ordinary citizens facing a relentless surge in the cost of living. The dramatic rise in inflation has eroded purchasing power, making it increasingly difficult for households to afford basic necessities. From food to fuel to housing, prices have skyrocketed, leaving many struggling to make ends meet. Supermarket shelves that were once stocked with a variety of goods are now witnessing shortages of essential items, as importers grapple with the soaring cost of bringing in products from abroad. The price of basic foodstuffs, such as bread, milk, and vegetables, has risen dramatically, forcing families to make difficult choices about their spending. For many, the rising cost of food has led to a decline in the quality of their diet, raising concerns about nutritional deficiencies and public health. The energy crisis, fueled by geopolitical tensions and supply chain disruptions, has also hit Turkish consumers hard. The cost of electricity and natural gas has soared, making it more expensive to heat homes and power appliances. The situation underscores the human toll of economic instability and highlights the urgent need for policies that prioritize the well-being of citizens. Section 5. Businesses grappling for stability, a struggle to stay afloat. Turkish businesses are facing a perfect storm of challenges as the country grapples with its economic crisis. The confluence of soaring inflation, a weakening currency, and dwindling consumer demand has created a hostile operating environment, forcing many businesses to make difficult decisions to survive. The manufacturing sector, a key engine of economic growth for Turkey, is particularly vulnerable to the current economic turbulence. Manufacturers are facing a triple whammy of soaring input costs due to inflation, a weakening lira that makes imported raw materials more expensive, and dwindling demand for their products as consumers tighten their belts. Many are struggling to pass on these increased costs to consumers, fearing that doing so will further erode demand and lead to a buildup of unsold inventory. The tourism sector, a vital source of foreign currency for Turkey, is also feeling the heat. While the country remains a popular tourist destination, the weakening lira has made it more expensive for foreign visitors. This has led to a decline in tourist spending, impacting hotels, restaurants, and other businesses that rely on tourism revenue. Navigating this challenging environment requires adaptability, innovation, and a keen understanding of the evolving economic landscape. Section 6. Global Headwinds and Domestic Challenges, a Complex Interplay. Turkey's economic woes are not solely the result of domestic factors. The country is also grappling with a confluence of global headwinds that have exacerbated its challenges, highlighting the interconnected nature of the global economy and the ripple effects of global economic shocks. The ongoing war in Ukraine has sent shockwaves through the global economy, disrupting supply chains, driving up energy prices, and fueling inflationary pressures. Turkey, heavily reliant on energy imports, has been particularly hard hit by these developments. The price of oil and natural gas has soared, putting further pressure on the lira and fueling inflation. The COVID-19 pandemic, while abating in many parts of the world, continues to cast a long shadow over the global economy. Supply chain disruptions persist, and the recovery in demand has been uneven across sectors and regions. Addressing these domestic challenges is essential for Turkey to navigate the current storm and build a more resilient economy in the long term. Section 7. The Path Forward: Reforms, Stability, and a Glimmer of Hope. The path forward for the Turkish economy is fraught with challenges, but amidst the storm clouds, there are glimmers of hope. Addressing the current crisis and charting a course towards sustainable growth will require a multifaceted approach that combines sound economic policies, structural reforms, and a commitment to fiscal discipline. One of the most pressing priorities is to restore confidence in Turkey's economic institutions, particularly the central bank. Enshrining central bank independence, free from political interference, is crucial for restoring credibility to monetary policy and anchoring inflation expectations. Structural reforms are also essential for addressing the underlying imbalances in the Turkish economy. This includes measures to boost productivity, improve the investment climate, and enhance competitiveness. Focusing on education, innovation, and research and development will be key to moving up the value chain and creating a more diversified and resilient economy. Addressing Turkey's chronic current account deficit will require a sustained effort to boost exports and reduce reliance on imports. While the challenges facing Turkey are significant, they are not insurmountable. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.